Hi friends, I saw this reply to my tweet and I thought it is a good idea considering the market situations now. Frankly, there are some bad indicators for the stock market happening right now, mainly 4, and I'll cover them in this video. Appreciate an early thumbs up. Last week, I did a video talking about the USD getting stronger. I'll link it up here. A strong dollar in economics is bad for the stock market. A strong dollar means that export gets more expensive, thus less export will happen for the country. This is the daily candle for the US dollar. If you draw a straight line across, you notice that the US dollar has broke two different kind of resistance. So I'm just going to draw two. Basically, this is a downtrend, and you see that US dollar has broke out of a resistance over here. You see it went out, and regarding this line over here, you see there was a bounce here and a bounce here, and finally it broke out. US dollar has broke out of two different resistance points, and I believe it's going to get stronger from now. If you take a look at the longer term approach by clicking all, you're looking at data since like 1986. You notice this thing which I like to teach you guys all the time, which is a wedging. You notice there's a very big wedge over here. And every time there's a wedge sideways and it bursts out of it, overall, it looks like an uptrend to me. Again, I personally think that it's going to be the short squeeze of the century for the US dollar, and probably it may happen in the next 5 to 10 years. Unemployment rates has never been higher in history. I do not know about you, but this can only keep up for so long. Something's got to give. The default rates are not skyrocketing now due to the government interventions. This applies to outside of the USA too. It's like my UK company have access to so much credit now. It's so easy and it's crazy. In Singapore, I used to pay like $3,800 a month for mortgage. Now it's like $1,000 plus. Many businesses can choose not to pay rents and have access to certain kind of relief package. And at this point, it's really hard to sue a business for no payment. If the government removes this protection, it's going to cause a domino effect. So the renters can't pay, the landlord gets into trouble, banks can't receive payment, forced bank sales is going to be a shit show. The good news is the government knows this, and I'm sure they're going to do something about it. This is the SP 500, and if you were to take a very long-term view, this is all the way back like 5-6 years. An epic pattern is forming. Right here is called a megaphone pattern. Does it look like a megaphone to you? It's either going to be the most bullish megaphone pattern ever, or it's going to be an epic crash of the century. I'll just draw some illustration. A bullish megaphone pattern looks like this. It breaks the megaphone line here and it continue going up. Or it's going to come crashing down like this and we all can kiss our money goodbye. If the second scenario happens, don't worry, I have a solution for you. I'll cover it towards the end of the video. But I think the scenario that's going to play out would be the bullish megaphone. Okay, the fourth point, let's talk election. This is the thing most of you want me to talk about. First, I would like to say, I don't have a preference on who wins. Election should have 3 voting options: Trump, Biden, or neither of the above. This is how I feel regarding your elections from halfway across the globe. America is an amazing country with so many amazing people around, and the best two you can come up with is Trump or Biden. You have 331 million people to choose from. I'm very sure there's one person who is smarter, more inspiring, great leadership, selfless, cares for the world, and above all, in a very pretty package, single but not available. Ooh. A Trump win means more deregulations, and deregulations is always better for business, thus the stock market is going up. A Biden win means more regulations, which is bad for business. However, if Biden wins, I'm pretty sure that America will sort itself out after a while, and the stock market will continue after a small correction. Innovative companies need deregulations, and it's a fact that regulation slows innovation. While the 4 points above is something to take note of, I'm not bearish about the stock market, and here is why. Ticker symbol TLT, this is a chart for bonds. Generally, bonds coming down is good. This means money moving away from bonds to the stock market. If you take a very long-term view of bonds, and I believe this is not my first time showing you this chart. This is all the way back to year 2005, 2003. Generally, the bonds move according to this channel. If you're looking at bonds now, it is at the upper channel, and there is a higher probability that the bonds will come down here than going up here. If the bonds come down here, this is good for the stock market because lots of money is being pushed out of the bond market to invest into the stock market. Evaluations now are reasonable. I know many value investors are going to disagree, but if you look at the SP 500 PE ratio for the past 90 years, you notice that it is not at its all-time high. The dot-com bubble was worse. The 08-09 crisis was worse. So the truth is the stock market is not overpriced. The interest rates are very low, and you look at the current average PE ratio is about 22, 23. The market is not expensive. Anyway, since I'm at the charts, I'll just take 1 to 2 minutes because you guys love this. Tesla Q3 earnings is upcoming in 2 to 3 days. And let's take a look at Tesla charts. Since my last video, Tesla has broke out of two wedges, the long-term wedge here, which is the orange wedge, and the short-term wedge, which is the light blue wedge. Also, our friend Vincent from Tasmanian.com, he sent me a chart on the reverse head and shoulders. So this is a very, very bullish pattern. The chances of Tesla spiking up to the next level should be really very high. Wrapping up this video, we know there will be a crash eventually, but all crashes always lead to a higher market. The low will always be like a higher low because it goes up like that. The best way to position is to invest in innovation. This strategy has never failed. I did a video on this, I'll link it up here. So what if the stock market corrects 50%? You know exactly what to do. I've done countless videos on this. My portfolio holdings haven't changed and I don't intend to change it. I've done videos previously backtesting markets and research showing that the best thing you can do is investing is to buy, hold, dollar cost average into innovative companies, and you outperform the best fund managers. Everything else are noises, and that doesn't matter. I hope this video helps you a lot in your investing. Appreciate your thumbs up, invest safe, and don't be a